All right, we should be live. Welcome to Thoughtful Money. I'm Thoughtful Money founder and your host. We're here for a special report this morning in this morning's live stream, folks. We're going to be talking about the explosion in price that's happened in silver, and I can't think of anybody to discuss that who would be better than Andy Schectman, who's joining me now. Andy is joining us from outside the U.S. He is taking time from a trip abroad to do this live stream with us. So, Andy, I can't thank you enough.
Pleasure's mine, Adam. Glad I can be here. Thanks for having me, buddy.
Thank you. Thank you. Well, it's sort of Murphy's Law, right? You hop on a plane to leave the country, and then you have, probably one of the most notable weeks in silver ever. Why don't we start with this? You have been in this business for a long time, Andy.
Yes.
What's your perspective on what we're seeing right now in the silver market? Is there precedent for this, or are we kind of in new territory here?
I've never seen anything like this. This is the term that everyone keeps throwing around is the word backwardation. Backwardation is an environment that shows extreme delivery stress. It's unprecedented. This isn't just volatility in my mind. It's the market exposing the shortages of physical silver, the frailty of the paper promises. This is something that I think is just beginning, and there's just far more demand for physical silver than there is the availability, and the paper system is beginning to show great strains. People have accepted paper promises for a very long time, and I think that's coming to an end. And look, this is decisively bullish for silver and other precious metals. But I think it's beginning to show that the paper promises that this whole Western system has been based upon is starting to break.
Okay, so paper promises. So we've heard the term over the years, those of us who have followed the precious metals sector, of rehypothecation, which is that there may be a silver bar there in a vault, but potentially it has been promised to more than one party. And it's fine if only one party at a time asks for it. But if you get multiple parties trying to exert their claim on it, all of a sudden people realize, hey, wait a minute, these bars have been promised to too many people. Is that the type of situation that we're discovering we're in right now?
Yeah, like for example, in London, they have a 140 million ounce float, yet they're trading 600 million ounces a day in contracts that technically are deliverable. What could possibly go wrong? There's over 2 billion ounces in paper claims out there on a float of 140 million ounces. So that's exactly what it is. It's a situation where the paper promises, this rehypothecation, is being called on the map. And you can see that. Look, for example, the lease rate in silver in London, when you lease silver in London, it would be something like you want to short a contract. You want to short the price of silver, but you don't have the metal. So you have to borrow metal through leasing it in order to deliver the metal, to short, to drive down the price. Normally that lease rate is somewhere in the neighborhood of 0.5% or 1%. In October, it's jumped up over 39% to over 39%.
Wow.
And at the same time, we've seen silver rise since August, when the lease rate was at about 1% or so, up to $53 here. So you see the price rising, the lease rates rising. We're seeing the exact same thing in platinum, but it's a situation where right now you have the spot market trading well above the futures price. In other words, buyers are very desperate for immediate delivery. And it's very rare to see this, Adam, in silver. Yeah. It's very rare. It signals urgent demand, depleted inventories, and really a systemic shortage of deliverable bars. And that's all because of rehypothecation. In other words, it's getting called onto the carpet.
Okay, and where is this shortage really manifesting most? Is it in London?
Absolutely, it is. I mean, you're seeing delivery stress on that is exacerbating it on COMEX. We've already seen 16.5 million ounces delivered in COMEX, adding to the limited vault supplies. But yes, the main stress is in London right now, and much more so than on COMEX. And really, it is, in my mind, the epicenter of where all of this could really get into some serious problems where you're beginning to see margin calls for traders out there who are receiving a margin call because the price is going against their short position and the lease rate and the borrowing costs are so high that they're not able to get the silver to cover their position. And that's when things begin to get very, very, very interesting. What it really tells us is that buyers aren't just rolling over their contracts like they used to. They're standing for delivery. They're demanding real metal. And these delivery numbers are well above normal. So I guess if you could encapsulate it easily, it's that the rush for gold and silver is real. It's intensifying. And markets just aren't trading paper contracts right now. The people want the real metal in hand. And in a world where paper contracts are vastly overstating the supply, that becomes a problem.
Okay, so we've talked in your previous appearances about these very high delivery rates, and you'd suspected that it might even be sovereign players that are trying to beef up their stores of the physical metal. Once things get really tight like this, right, and people start realizing, there's maybe not enough metal to really go around to satisfy these contracts, does it then potentially fall into like a vicious cycle, sort of like a run on a bank, where people say, oh my gosh, this is tighter than I thought, then give me what I can get now. And then that places even more stress on inventories. And then you, again, potentially have the equivalent of a run on the bank.
Yeah, absolutely. The short-term implication would be liquidations and survival-driven selling can trigger volatility. That's the short term. Even sharp pullbacks. Medium term, as far as I'm concerned, is that once this forced selling ends, a physical scarcity starts to dominate. And silver sustains its higher prices, $50 plus. But long term, if confidence in this paper system collapses, like we're seeing, a structural reset could start to reprice silver. That's what I'm seeing. $75, $100. And I say that to you, and that's not pie in the sky, because if you take the 45-year cup and handle that goes like this, the way technical analysis works is the top of the cup 1980, the bottom of the cup the early 90s, and again back up to 2011 again, which is near the top of the cup, and then formed another. It's a double cup and handle. But the way that it works is once silver has broken through 50, which it has, technical analysis would say you take the distance from the bottom of the top, which was $46, from 50 to 4, and you add it to the top. That would mean that the next target from a technical analysis standpoint is $96. And I think that's exactly what you will begin to see, where the market physically begins to exert itself over the paper shenanigans that we've seen for a long, long time. The United States for the last 40, 50 years has bet on a strategy of strong dollar and U.S. bonds and service jobs, where the rest of the world, in particular the BRICS and China, have not been ignoring the factories like we have not been ignoring commodities like we have. China, as a good example, did the opposite. It built factories, accumulated commodities and gold, and now is really pushing away from relying upon the dollar. That is ultimately, I think, where we're going. Yes, exactly that, right there.
All right, a couple of questions there. So one, as demand for physical really begins to jump and it's harder and harder to get inventory, not only does the spot price go up, but the premia go up as well, right? The premium that's charged on top of the spot price of silver. Are we starting to see that now? I honestly haven't been tracking spot price of silver that much recently, but I did see someone put around an X yesterday. One of the bullion dealers online was selling an ounce of silver for, I think, $62, right? Which was, at the time, about a $11 premium, which is what translates into around a, 22% premium or something like that. Are we seeing premiums starting to blow out?
Yeah, ours aren't that high, but you are beginning to see premiums start to blow out. And even worse than that, what you're going to see is a massive spread between buy and sell, because it's narrowed a bit to about $1.80. But yesterday and the day before, we were about a $3 spread between the futures price and the spot price. Mm-hmm. So let me explain what that really means. If I'm going to buy 100,000 ounces of silver, and the spot price says $52, but I'm not able to hedge it on the futures contracts at anywhere near that price. It's actually $48 that I can hedge it at. That's what the futures market is. This is backwardation. In other words, where the futures price is lower than the spot price. It's very, very unusual. Normally, it's called contango, where the
Hmm.
spot price is X and the futures price is X plus one, plus two, plus three. The further you go out, the more you're supposed to pay for the time value added of money. It's like if I loan you money and you're going to pay me back tomorrow, I probably won't charge you interest. But if I loan you money and you're going to pay me back in 6 months, well, I probably am going to charge you interest, kind of thing. Well, that's exactly what contango would be. That's a normal market. The backwardation is the opposite of that. So for dealers who have to buy metal at X, they can't hedge it anywhere near X. It's X minus 3. So you're exposed. There's a big spread between buy and sell, and the premiums are jumping noticeably on the Eagles. And this is exactly what we saw during the pandemic. The premiums on Eagles, every major dealer in America right now is north of $6, $7, $8 an ounce over spot, just like that. I've
Hmm.
been screaming to everyone for the last year and a half that it's very unusual how low the premiums have gotten. And now the U.S. Mint, which once again is the model of inefficiency, is not able to keep up. Gold buffaloes, right? As an example, gold buffaloes. Our cost on gold buffaloes is north of $200 over spot. Our cost before we
Wow.
make a penny. Right now, the biggest distributor, one of the biggest distributors in America, who I do a lot of business with, their cost on selling me silver eagles, if I buy massive amounts, will be north of $6 over spot. That's before I make a penny. They have no platinum, zero in stock. These are massive wholesalers that trade in the billions of dollars per year. We're beginning to see a system where, the paper versus physical divide is breaking. The credibility of paper, silver, and gold and platinum futures, especially unallocated accounts, is
Right.
eroding as more and more players demand physical settlement, and that's going to exert itself in the premiums that you see in the retail market. It's becoming much harder for dealers like myself to balance that. Not only is there a lack of liquidity, but you have this huge spread between futures and spot, so it's hard to hedge your position.
Yeah. Couple of things. One, so this just underscores, I think, kind of a big reason why you do what you do, Andy. If you don't hold it, you don't really have it when things get really tight. And we've seen in cycles past, when it's gotten hard to hedge like this, we've seen some precious metals dealers who were, to use Warren Buffett's language, who were sort of swimming naked. That's when they've gone belly up. I'm thinking, notoriously of Tolding, whenever it was that, 10 plus years ago.
Yeah.
I guess first and foremost, just to give you a chance to quell anybody's concerns that might be a Miles Franklin customer, presume you're doing fine here, but I'll let you tell everybody that.
Yeah, we are. I mean, this is kind of an environment that I thrive in. I've been talking about this stuff forever, and I put my money where my mouth is. I've asked my traders to go way, way out over the last month or two when supply was abundant and premiums were low. I knew that this wouldn't last. And so we go way out on our line of credit. We buy everything that we can. We are a company that is wholly owned. We are not subservient to financiers and to investors. We don't have to keep this really thin margin and huge profit level for investors. Instead, we reinvest our profits back into the business and go super long on inventory. I would say that during COVID, no one came close to the inventory that we had. And I would go into future months, 3, 6, 9 months out, make purchases with money down, commitments. And I've done the same thing here. I've loaded up on anything that wasn't nailed down. Instead of taking big distributions, I put my money into buying more product because I think that is ultimately going to be a hallmark of this industry. Look, I did an interview with Rick Rule the other day, and once again, he said the exact same thing, Adam. He said, 0.5% allocation, and it's not just physical metal, it's physical metal and metal equities, he says,
Mm-hmm.
from Joe and Jane six-pack to the Harvard Endowment Fund. Now, he always used to say that exact same phrase, and I borrowed it from him. Funny thing is, the Harvard Endowment Fund just bought over 100 million in gold, so I don't know, things are definitely changing. But yes, you will witness it. See, during the last year and a half, the price has been low, the demand hasn't been very high, and it's only the people like your listeners who understand the importance of owning it. And so the refiners and the dealers and the wholesalers who have been choking on product, they haven't gone out of their way to replenish. And just like that, things change. And I say that all the time, and it's so hard to say this stuff because you get the cynical people out there say, he's talking his book, BS, but I'm not. I've seen it over and over and over again. And so now what happens, you're going to have a lag time, right? You're going to have a big lag time into December where the futures price is well below the spot price, making it very hard for people to even hedge that long exposure. I have done it because I knew that markets repeat themselves. I knew that we were living in a very tenuous environment. So yeah, we have a very good supply of product. But again, when you realize that such a small percentage of the public really has any exposure, that can change very quickly. We've been fortunate enough to have the Sprott brokers run all their business through us, where Rick used to be the CEO.
Right.
And one of their brokers, or a few of their brokers, have been placing massive orders over the last several days with us, indicative of smart money, I think, realizing that something is broken and things are changing. So it's not just my brokers, it's not just our business. We work with other people like the brokers at Sprott. And I will tell you that the demand at a level of sophistication that you speak to, the people who you speak to, I would say are far more sophisticated than many of the financial advisors that they would work with mainstream, because they understand the big picture, right? You go to a financial advisor who might be the best in the business, but doesn't acknowledge that the world is the way that all of us think it is. The macro picture, the geopolitical picture, which is so very, very important to understand if that's going to be the backbone of advice that you're given on your portfolio. So I guess all I can simply say to you is that most people are going to be caught off guard by this. And it will go from an environment of high prices that will identify the market to most people, to your people saying, geez, I can't get it easily. It's disappearing. And just like that, it will disappear. So while things are good right now, you get look, let me put it to you this way. Goldman Sachs said, if the market even suspects for a moment that the Fed is losing independence and 5% of the money that's embedded in Treasury shifts to gold, the price will go parabolic, will go well north of 5,000. It's going to go well north of 5,000 because Stephen Mirren is the architect of the Mar-a-Lago Accord, and he is now on the Fed. He was Trump's big advisor. Or even this Bo Hines, who was Trump's crypto advisor. He's now running USA Tether, which is backing the Genius Act. There is no independence. The market is going to catch on. The big money is catching on. The rest of the money will too. And then getting product will be very difficult because we've gone a year without any of these wholesalers or refiners or big importers finding much need to go deep into their lines of credit to secure product because there wasn't any need to. I knew there would be. And whether I was stupid or lucky, I'll tell you that there are very few companies out there that have the inventory that we do right now.
Okay. All right. So many questions for you. Although, folks, I do want to get to your questions as well. This is a live stream after all. And I'm going to put a comment up here by Mary Ellen because I'm going to say, I'm going to give priority to people that say really nice things about Andy and me, like Mary Ellen has just done here.
Thank you, Mary Ellen.
Thank you so much for the kind words there. But no, actually, folks, we'll take any and all comments here. They don't have to be nice. Okay, a couple quick questions before I start pulling from the live stream here. You said you were talking to the Sprott brokers. Andy, in moments like this, when I presume there's now positive inflows into the ETFs for companies like Sprott, does that then force them to have to go out and buy product because they've got to be one-for-one matched backed in those funds?
Well, ultimately, yes, but you look at the BlackRock, State Street, SLV scam ETFs, as far as I'm concerned. It's funny, SLV and GLD are run by JP Morgan and BlackRock. JP Morgan, who paid a $920 million fine for manipulating the metals market. But their prospectuses say that because of the demand, there can be an inequity. There can be a time where there's not as much metal in the system as there are bars behind it. But in general, yes, that is exactly what is supposed to happen. Now, the Sprott Physical Trust is anything but a scam. SLV and GLD, I wouldn't put my money in to save my life. And if you doubt me, read pages 6 through 12 titled Risk Factors. Really read it slowly, and I think you'll come away saying, "Whoa, I don't want to. I don't want to own that."
Okay, but even the physical backed funds kind of contribute to the scarcity when there's a run like this, because as investor capital comes into them, they have to then bring in new bullion to
100%.
match on a 1-for-1 basis, right?
100%.
Yeah. Okay.
And let's not forget that, you know, for the last 5 years in a row, we've had between 1 and 200 million ounces short in supply versus demand in mining with silver. So you have a declining availability of supply. You have an increased demand in silver, not just for its monetary aspect, like we're talking about, but it's things like military, it's things like electric vehicles, it's things like solar panels. This plurality in demand is very unusual in the commodity, and silver exemplifies it. So on top of an expansion in demand, you have a decrease. Silver is found in nature like your skin is epidermis. It's found in a form called epithermal right near the surface. The big deposits are declining and disappearing. Only about 20% of the silver mined last year, about 170 million of the 850 million came from mining companies like First Majestic. The rest of it is byproduct of
Right.
other mining. It's disappearing in nature. So yes, this is a once in a generation, I believe, shift into an asset that has been controlled by the West forever on leveraged futures contracts that is being exploited and understood by the rest of the world. And we're beginning to see it manifest. Now, this may not be that moment, but in my mind, it is moving towards that moment.
Okay, and now you're getting to the heart of what I wanted to discuss in the live stream today. So people, especially those who have not yet been invested in silver, have seen from the sidelines, oh my goodness, this metal just exploded. It pretty much, you know, I don't know exactly what it's now up this year, but it's got to be up 60+% at this point year to date.
Yeah, even more.
Yeah, probably even more. So, you know, there's a bit of a debate going on right now, which is, hey, this is the repricing. This is the great repricing that you just talked about as the world wakes up to the Fed's not independent. Silver is rare and becoming more scarce in the earth. It's been rehypothecated to many different clients. It's sort of this perfect storm of things, right? And people are saying this is the step function. It's, you know, it's not looking, the price isn't looking back from here. It's just going to continue going up, right? And then there are, and so, you know, get on the train. It's not too late. Get on right now. Then there are others, and I would even put myself a little bit in this class, which is, you know, look, nothing goes up in a straight line. Maybe this is the grand repricing. I'm not sure if that's going to be like something that happens in a week. You know, we're probably going to see it go up, it pull back, it go up, it pull back. And so, you know, the other question is, hey, is it too late to get in here? Right? Has the big move already been made? And is there going to be a pullback here? And so let me give my little quick one man's point of view, and then you can give a much smarter answer here, which is, I believe the long-term trend is quite bullish the way that you've mentioned for all the reasons you've mentioned. And if we're having this conversation in 5 years or 10 years, silver price is probably at a price that we might not even be able to comprehend at this moment. But it has moved super far, super fast. There is systemic stress right now that will likely get eased temporarily at some point. And so it would not surprise me to see silver pull back at some point here. To what level? I don't know. Would it shock me if it went back down to 40, touched in the high 30s? No, I wouldn't be shocked. It's a very volatile asset anyways. Do I think that would be a buying opportunity? Yeah, probably. And so I mentioned all this to say, I personally don't think it's too late in the long term. I think in the short term, yeah, if you bought today, just be mentally prepared that it might go down before it goes higher again, because it's moved so far so fast. What would you say?
I would say that that's probably a very logical explanation. That is what we've seen for a very, very long time. To me, what this is, it's like the dollar is beginning to be exposed as a unreliable store of value, kind of like a melting ice cube. The trust in the dollar is fading. It's fueling higher commodity prices. And,
yeah, and sorry to interject, but I'll note too,
yeah.
you've probably seen the chart that central bank balance sheets, this is, you know, mark to market with gold, but have just gold has just surpassed U.S. Treasuries as a percentage of foreign central bank balance sheets here, which lends big credibility to your point there.
That's huge, and it's exacerbating. This is the dollar devaluation trade. This is exactly what I said on your show, where they're using the Genius Act and the stablecoin bill to not only to fund the Treasury market, but think of the $3 trillion that's held up and holed up at the Federal Reserve, right? All of this money that's been created by the banks that they don't want to lend out into a fractured economy, so they leave it at the Fed. They're going to now pile all of that into Treasuries, into the stablecoin bill, the Genius Act, and this is going to devalue the dollar. Keeping your wealth in dollars is the surest way to go broke. This is what they want to do to bring back manufacturing. That is the Mar-a-Lago Accord. They want to devalue the dollar against assets in order to make manufacturing more competitive. And Judy Shelton was just on my show again. Actually, Michelle McCory did it this time. She runs our YouTube channel as well now. And last week, she said it again, that Trump is going to peg the back end of the Treasury market on July 4th next year. It's a big day for him. It's the 250th anniversary. If they back the back end of the Treasury market with gold and let gold slowly, like Luke Groman says, let it go higher, 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 higher. And yeah, there'll be volatility, but it keeps going. And no one acknowledges it. Everyone says, oh, it's FOMO or it's going to crash. But what if it's part of a bigger plan? By letting gold go higher, you're not doing it to make my job easier. You're doing it to let the dollar devalue. Why would you want the dollar to value? Ask Stephen Mirren, the architect of the Mar-a-Lago Accord, to sell manufacturing. How do you sell manufacturing? You abandon the reserve status of the dollar. You don't give up on the United States, but you abandon the reserve status on the dollar by letting the dollar collapse. It's down 11% in value already this year and falling as gold is moving in the other direction. If you peg it to the back end of the bond market, and in Judy's book, she says 5, 10, 20, 30, and 50, with 30 and 50 having a very small coupon, very small. But if you do that, you can now bring back manufacturing at zero upfront borrowing costs and sell your product to the world at a massively devalued dollar. This is what they want to do. And so when you see gold and silver going higher, it's not gold and silver going higher. It is the dollar losing ground and losing value. And the big money understands this. The big money understands this inherently. And this is what they have been doing. The central banks understand this. This is why they have been taking positions in gold and silver the way that they have. I think this is just the very beginning. So yes, you're going to see pullbacks. You will see volatility. Nothing goes straight up. But I would agree with you that ultimately it is a buying opportunity. And I try and say this without coming across as being a snake oil salesman. I don't care if people rush to buy metal from me. That's not what this is about. It's about trying to convey something that I believe in my soul is happening. We have reached a point where being the world reserve currency, even ask Vice President Vance, who has come out and said so, being the reserve currency is no longer a benefit to the United States. It's a detriment. It's a benefit to us consumers. It's a detriment to anyone who produces anything. And in order to continue to move forward as a country, we need to reshore manufacturing. And the only way to do that is in a devalued dollar and at very low upfront borrowing costs. The Genius Act will keep rates low on the front end of the curve and fund the government. The pegging of gold at a much higher price, regardless if they revalue it or not, which I think they will, I think they'll just let it keep on going higher slowly, and no one notices it, right? No one is taking action because they're waiting for the other shoe to drop, and it always has. Will it continue? I don't know. Gold's up 55% this year. It's on pace for its best year ever. Silver's up almost 70%. And I do think that commodities will now be a reflection of a declining dollar. It's not that the commodities are going parabolic just because. It's because the dollar needs to be devalued in order to reshore manufacturing. And if there's nobility in what President Trump is trying to do, if I'm reading this right, it is the realization that we cannot continue to be the world's superpower without manufacturing anything, with being reliant on the world for everything. And ask yourself this: if the Congressional Budget Office, has come out and said by 2031, 100% of all tax revenue will go just to pay the interest on the debt and mandatory entitlement, How do we continue to fund our military to rule the world when military spending is discretional? Yes, this is all together. Buying gold and silver right now is not, you're not buying it to get wealthy. You're buying it because it is wealth. And the biggest money in the world, the biggest. It's one thing for me to say the central banks are doing it. It's another thing altogether to say the most sophisticated traders on Wall Street, the institutional traders who are standing for delivery left and right, they know what's coming. And I think that's what you follow.
Okay, good. Yeah, and I want to bring it down to those brass tacks here. Real quick, just to note that if indeed that is the plan, right, in order to reshore manufacturing, I also will note that plan would also really help servicing the current pile of U.S. debt.
Of course.
Right, exactly. So there's multiple reasons why this would be attractive to the government. Okay, so Andy, you're in the business of selling, transacting with people that want to buy and sell precious metals. What have you noticed over the past week, past couple of weeks, if anything, in terms of the tenor and the composition of your customers? In other words, you just said they're the big guys, the really rich people really get it. Are you seeing them doubling down here? Is it big money? Is it smart money? Is it rich money? Is it the regular guy coming in and just trying to sell the family silver, or buy with pocket change? What are you noticing?
We're seeing nothing in the way of selling, Adam. Nothing. I mean, literally nothing in the way of selling. And we're, for the first time since 2021, we're seeing the average person a little bit more come in. And I must have received 30 emails yesterday. They all said something like, "Are you out of silver? Are you going to run out of silver?" The big money has been buying up gold. To tell you that my cost on a gold buffalo, my cost is north of $200. I've never even dreamt of saying anything like that. That's before I make a penny. The big money has been doing this now for the last 6 months, and I've mentioned that on shows, and money that is concerned not about making profit, but about protecting what they've worked so hard to obtain. Now you're getting a little bit more anxiety-driven buying, which I don't think is out of line, to be honest with you, because I'm watching how fast our inventory is depleting, and I have a good inventory. But I talk to my suppliers, and the big money in the wholesale market, they're frozen. They don't know what to do. One of my big suppliers yesterday morning sent me an email first thing in the morning and said, "We're halting trading. We're halting trading because until we get a grip on premiums and on availability." I'm going to read to you a email or a text message that I got from Michelle McCory last night. Now, I haven't been able to validate it myself, okay? But I want to read this to you. I got to turn my phone on. It'll take 1 second. Because if it is true, it speaks of a US-based dealer, but it also speaks of the Perth Mint in Australia. Let me just read this to you real quick. If it is true, it is the beginning of exactly what we're talking about here, about some crazy times. She says it was on X, and come on, pop up. Always when you need it to pop up, it never
Murphy's
does
Law.
quickly. Give me a second, shouldn't take long. The title is Perth Mint Shortages, but
well, while you're pulling it up, I'll share with folks that. Yeah, there you go. Look, I haven't heard this, but I will say that many years ago, I bought Perth Mint certificates for gold and silver and platinum, and most of it was in gold. And golly, this was back 2012 or so. I ended up having the gold shipped out to me from the Perth Mint. I just said, you know what? I'm just not comfortable with it being literally on the other side of the world in the city that's the furthest from any other major city in the world. And now you're making me feel good about that decision.
Yeah, and it's really crazy. It's not opening up.
Okay.
Basically, what it said was that the Perth Mint had shut down delivery, and they're not sending anything out. And I can't even believe I can't get this to open up. Here we go. I think it's going to open now. Hang on. Bear with me because it's worth listening to.
All right. Well, I'm going to do a quick Google search while we're talking here. Stops delivery. And sorry, folks, you're
Okay,
watching
here
the
we go.
sausage
Here
being
we
made in
go.
real time. Okay, read
Here
it.
we go. This is it right here. It says Perth Mint suspends silver sales amid global shortage. Australia's Perth Mint halted all silver product sales on October 13th due to surging demand from industrial investment sectors overwhelming supply chains. U.S. dealers like Brian Kuzmar, who I don't know, of commercial rare coins and precious metals have frozen transactions, citing inability to hedge source product and price premiums, while Indian markets face empty shelves. The Silver Institute projects a 2025 market deficit of over 200 million ounces, pushing spot prices up 4%. So, all I can tell you, I don't know if it's true or not, but you're beginning to see things like strain not only in mints and refineries, but also in retail companies. Now, I received an email yesterday from one of my suppliers, and I'll see if I can find it real quick. It will take 10 seconds to read it to you, if that be the case. Um, yeah, of course, my phone, I had it shut off when I started, so it's crawling. In essence, they just came and he just said to me that we're suspending all transactions until we figure out what's going on. And although it did open back up, these are things I've never seen before. I did want to say one thing about a question that I saw up in your chat that I
Yeah.
wanted to mention. Someone said they owned SLV and GLD within their IRAs, and should they sell it and take the hit? Tax wise, there are no tax hits when you sell it within
Within an IRA, you
your
should be fine. Yeah.
correct. Correct. And yes, I do think the real thing is far better, especially within an IRA. You can own physical metal within your IRA. Um, you can't ever take possession of GLD and SLV. So, if physical possession, to me, that is the whole key to a precious metals IRA is the ability to physically possess it if you wish, although it is a taxable event through distribution, you could say, send me my metal, and they would do so.
Okay. And there are some other alternatives as well, right? I mean, you and I talked about this a little while ago, Andy, previous one. Like there are ways in which you can own precious metals in your IRA, like physical bullion. To your point, the danger there or the issue there is that's often once it's in your hand, that's pretty easy to claim that was a distribution. You're going to be taxed on and probably penalized on an early
100%.
distribution if you're young enough. Yeah. Now you could own something like Ounce or some of these other fully backed ETFs that also will deliver to you upon request. So in other words, you're holding something in your IRA, in your retirement account that is giving you exposure to the price of the precious metals. It's fully backed, so you might not have the same worries that Andy has about SLB or GLD. But things get real wonky, and you just say, you know what, I want the metal shipped to me anyways. Those companies, at least that's their agreement inside their prospectuses, that they will do that for you. Not the cheapest way to get your metal, but a way to get it, when it's important.
Yeah, and I also noticed that, Charlie Pellerin, hi, Charlie, you're one of the greatest guys. This is one of the best guys ever. Thank you for the kind words, Charlie. Someone mentioned that junk silver pre-65 is the best. I've seen a couple people mentioning it. I was able to buy $18 million worth below spot. The dealer said to me more or less, look, he's a big wholesaler friend of mine, and he said, look, you take it all, I'll give it to you below spot. This is a guy that's very wealthy, and he
This
doesn't
was
hedge
when?
his position.
When was this?
Less than a month ago.
Okay.
And so we still have probably half of it left, I think. I don't know how much, but we have a good amount left. But we're able to sell it at barely over spot, literally barely over, at the cheapest price in the United States. You want the best value? This during the pandemic, I would have paid you $11 or $12 over the price of silver to buy it back from you. Next to Silver Eagles, it was the most expensive item that there was. But this is how bad it had gotten up until just recently in terms of mainstream. At the same time, one of the things that I found so interesting about this market, Adam, was that at the same time you had record participation by the public in the stock market. All-time high mom and pop retail in the stock market over 55%. All-time record high on leverage with option exposure and all-time high margin exposure over $1 trillion. All-time high for the retail public. At the same time, the insiders are selling between 2 and 4 billion a week since June, and Bezos selling 7 billion in Amazon stock, and Buffett on 500 billion in cash, and all of the institutional traders moving the other direction, and standing for delivery on physical metal and COMEX. In other words, the public is all loaded into the equity market. The big money is leaving the equity market and buying copious amounts of silver and gold, more so than we've ever seen, not just the central banks. And what could possibly go wrong, right? Well, so in terms of junk silver, I was able to buy because this guy doesn't hedge his position, and he let it run all the way up. He said, "You take it all, I'll sell it to you below spot," which I bought it. There are good values out there still. I don't know how long that lasts for, but you look at the Silver Eagle and it's anything but. You look at every major online company out there, I'll probably be the cheapest on Silver Eagles, but you're not going to find any major company out there that will sell you Silver Eagles in quantity, probably at under $7 an ounce over spot. Just like that, when 3 weeks ago, they would have been sold to you for $4 over. And things are changing very, very rapidly right now. There's still good deals out there, but I don't know how long that lasts for if this continues.
Yeah, I mean, I guess it sort of depends on how much the demand continues to maintain from here. But right now, the momentum seems to be higher. A quick question for you, Andy. So when it comes to the different premia for the different form factors, so like in gold, you mentioned, people are willing to pay the most or demanding the most for the Buffalo, right? It's become very expensive for you to buy, right? Why does that? I'm just curious, like what is driving that? Because technically a sovereign coin, it's not really supposed to be, a collectible asset that appreciates with collectability. It's really just supposed to be a great representation of an ounce of gold. So why pay more for a Buffalo than an Eagle, than a Maple Leaf, when it's really all just, an ounce of gold at the end of the day?
Well, that's a good question, and let's break it down. First of all, this is all controlled by the primary distributors, right? There's about 6 or 7 of them. Miles Franklin was nominated by one of those primary distributors to be one of 27 U.S. Mint authorized resellers about 20 years ago. At the time, it was Prudential Beige, who got bought by Jefferies. And coincidentally, Jefferies just came out and said their next target for gold is 6,600. They know gold very well. But those primary distributors buy from all of the major mints. And when the mints run out of product, those distributors have everyone begging them for product. They jack up the premiums not only to buy, but also to sell. Right now, the U.S. Mint, they're not making any 2025 gold Buffaloes right now, and I don't think they have any plans to do so. They haven't made any Platinum Eagles in 3 years. So premiums on things like Platinum Eagles, if you can find them, are north of $200, way north of $200. To buy platinum, which is way lower than the price of gold, right? So percentage-wise, way higher. In fact, I look at one of the biggest distributors in America. I look at their balance sheet right now, what they have, or their inventory sheet. No platinum at all, zero. It says platinum maples, sold out. Platinum Valcambi bars, sold out. When you talk about the Buffalo and the Eagle, you have 11 states and many more considering it that are talking about legal tender laws. Almost all of them mention U.S. gold and silver coins as legal tender. The demand for the gold coins made by the U.S. is way higher than anything else. But you're right. Gold is gold is gold. It's kind of like this. You're having a party, a big party. You're having the Taggart family reunion party that coincides with the Super Bowl. Your team is in the Super Bowl. You got everyone coming to your house, 200 people. Your wife says, Adam, you need to go to Costco and buy soda and hot dogs and hamburgers for the barbecue. So you go there and you're thinking, geez, I'm going to have 240 people. I need 500 cans of soda. So you go down the soda aisle and you see Coca-Cola and you see generic brand soda from Kirkland. That's 80 cents a can less than the Coca-Cola. You say, well, geez, if I just buy half Coca-Cola and half Kirkland brand, 250 times 80, that's a couple $100. I can buy the hot dogs and hamburgers with that. That's what you do. You have a great barbecue. You got 2 buckets sitting outside, half with Coca-Cola and name brand soda and half with Kirkland brand soda. Now, in the end, which bucket do you think will be emptied first? And you're right. If you're dying of thirst with a hamburger in your hand outside at a barbecue, you'll drink the generic soda. They all drink the same. But the American products in this country have demand far greater than anything else. And when you add into it the legal tender laws that are being passed that say and mention specifically American coins, there's just a demand for the American coins, both gold, silver, platinum, and gold, silver, and platinum, that they can't keep up with. They are the model of inefficiency. They are horrible at keeping up with demand, and as a result, the primary distributors jack up the prices. So you can buy other items, but in the end, if you want the greatest amount of liquidity and demand, and I think when people buy stuff in this industry, they don't think about that enough. They don't think about the backside of the trade. It's very easy to be penny wise and pound foolish. And I think that you can have the greatest thing in the world, but if it lacks demand, what good is it? You want something that someone says, yeah, I want it. Absolutely, give it to me. I don't want to have to haggle with you about saying, no, but this is really great too. And so whether you're talking gold bars from Costco, which are also getting expensive and hard to get, or Canadian Maple Leafs or Krugerrands, they're all an ounce of gold. But the real demand in this country is for U.S. mint products, and unfortunately, the mint that produces it does a very poor job at providing adequate supply. And in particular, when you go through a period of time like we saw for the last year plus, where there's tepid demand at best by the mainstream, they have no incentive to jack up supply until we get to a position like this. This is exactly what we saw for 4 years during the pandemic.
Yep.
$13, $14, $15 premiums on silver eagles, $200+ buyback premiums on gold eagles and buffaloes. And now the mint just isn't making enough buffaloes. And you look at the amount of silver eagles they made this year, in my mind, they'll be a collector's item, literally like the 1996 silver eagle, where they hardly made any. They've hardly made any. Premiums are only going to go higher on American-made coins.
Okay. All right. We only have a couple minutes left, so we got to get to brass tacks and relatively short answers here. But so right now, Andy, in this market, right, which is a hot market, tight market, what's your advice to people around buying silver? Let's start with the person who hasn't bought any. I imagine you're going to say, just pinch your nose and buy in and get an initial initial position. For those that actually already have exposure, is it just, hey, just keep your dollar cost averaging going on? Or is it, hey, maybe wait a little bit, see if we get lower prices before we take off again? What would you say to them?
I wouldn't do that. I'd cost average. Cost average is the only way to smooth out the uncertainty curve. You know, we're all waiting for the other shoe to drop. What if it doesn't? What if it keeps going higher? We are breaking through a 45-year cup and handle, the strongest technical formation I've ever seen. And I do think you should definitely build a core position and then cost average your further acquisitions. And right now, the best value by far is pre-65 constitutional silver. It's not even close.
Really? Okay. In terms of the cheapest way to buy an ounce of silver?
Cheapest, and during the pandemic, it was the second most highest premium, difficult to get item, period, for 4 years.
Why was that?
Because you can't reproduce it. It hasn't been made for over 60 years.
Okay.
And the utility that it gets, 14 dimes is almost exactly 1 ounce of silver. So if things ever really were to get to a very high level, or the dollar was really something that was sliding precipitously, in theory, you'd have 14 transactions with 14 dimes versus 1 transaction with a silver round or silver eagle or silver maple.
The way to
but
buy
if I want 1 ounce coins, there's 6 major mints. U.S. too expensive, maybe. Canada, Austria, Australia, South Africa, United Kingdom. It's the Britannia, the Krugerrand, the Kangaroo, the Philharmonic, and the Maple Leaf. Those are all better values than the Silver Eagle right now, even though I like the Eagle better.
Okay. All right. Somebody said that they watched a live stream of yours last night, and your advice, given the current market environment, was don't sell your silver and maybe just keep dollar cost averaging. Their interpretation was you were saying gold is still something worth continuing to buy at this point, maybe buying a little bit more aggressively than dollar cost averaging. Is that true?
But
Or
what I said was it's not time to trade your silver for gold yet. There will come a time to do it when the ratio corrects. It's an anomaly where the ratio is. For 5,000 years, the ratio was 16 to 1.
right?
It's coming out of the ground at 7 to 1. There will come a time to trade your silver into gold. But yeah, I wouldn't. Look, I think gold's going to go higher than anyone thinks possible. It is being reintegrated into the monetary system 100%. So, to put all your money into silver, if you're buying precious metals, it is a better value and it does have an angle. I still think I wouldn't ignore gold. And even though it's gone up, you know, high, I think it's going to go much higher. Not straight up, but I really do think it'll go higher than people think. If Judy is right and if I'm right, and they're going to peg it to the back end of the Treasury market, it has to be much, much higher. Luke Groman says they'll let it go to 7 or 8,000, and then they'll revalue it from a higher level so as to not have to revalue it from such a low level. Luke Groman is as smart as they get, so I wouldn't discount what he says either.
Okay, thanks. All right, I'm going to have to start wrapping it up here. I will note a couple of things. So first off, folks, if you enjoy seeing us do these special report live streams in response to things that are going on in real time in the world, would like to see us do more of them in the future on different topics. Let me know in the live chat or in the comment section below if you're watching the replay. And of course, we'll do more of that. We want to do more of the things you want us to do more of. I also want to give special appreciation to Andy today. As you guys know, he comes on the channel from time to time, and he always comes when I ask him to. This week, I'm asking him to do triple duty. And this is all why he's out of the country and getting bombarded with calls from clients and everything. So Andy, I very much appreciate you taking the time to do this.
Adam, like I've said to you from day one, you are one of the most respected, best analysts I've ever seen in this industry. I mean that sincerely. I hope all of your viewers already know that, and it's my honor to be here. I would come in from the sun at risk getting in trouble with my wife any day to be here. So thank you for having me. 100%.
You're a good man. I promise to minimize my requests that could get you in trouble with your wife there, but
it's all right. I'm used to it by now. I'm used to it. I'm good at deflecting it.
And a reminder for folks that Andy is going to be participating in the Thoughtful Money Fall Conference this Saturday. And so we'll get to expand the discussion beyond silver in there. There'll also be some additional live Q&A opportunity for Andy. We will also have a few of the people that Andy mentioned, most notably Judy Shelton will be speaking at the conference. And I did a little bit of pre-recording with her, and I'll send you the clip of this after the conference, Andy. But I asked her one question that she gave sort of a fairly long 3-minute soliloquy answer to. And it's one of the most meaningful 3 minutes I've ever recorded in my career. So look forward to sharing that with you, and then obviously with everybody who comes to the conference.
She's an amazing lady, and I think everyone should check her out. I mean, there are very few people I've ever spoken to as well who get it quite the way she does. So yeah, I'm looking forward to seeing that.
Yeah, and hopefully her concept of a gold-backed U.S. Treasury, as you were talking about there, hopefully that gets adopted. And she had to be a little bit coy, at least when I was talking to her. But I asked her, if that is gaining any traction in the new administration, and the impression I took from her answer was she couldn't be super specific about it, but yes. And that would really be a real thrill if that were to happen. So most important question here for you, Andy, is, all right, if people are watching this and saying, you know what, I really need to increase my exposure to silver and possibly gold as well, where should they go? As most folks I think watching know, for now, much of this year, Miles Franklin has been Thoughtful Money's endorsed precious metals solution provider. And you have been very kind to say that, hey, if people just email you at info@milesfranklin.com, and that's the email address here on the screen, that you will make sure that either you or one of your top lieutenants there at Miles Franklin really gives sort of white glove service to Thoughtful Money viewers, correct?
100%. And it's really important that they put Thoughtful Money in the subject line or somewhere embedded within the email. We'll give you a price list that will be as good or better than anywhere in the country. We update it 2 or 3 times a week. You find better prices, let us know. Chances are we'll beat it if we can. But we want to give your people special white glove service and take the time to answer their questions. And that's important where we are right now. So yes, info Miles Franklin. Any questions you've heard here, questions on IRAs, questions on just getting the prices, let us know. We'll work with you. We'll make sure it's a very, very, very good experience. You have my promise on that. And if they're directed specifically to me, please put I need to talk to Andy, and I'll get back to you myself.
All right, Andy, for that and for coming on and for so many reasons, I just so very much appreciate you. Got to wrap up here because I got to go do a recording in 2 minutes from here, and I'll let you get back to your time there outside of the country. Again, thanks so much for dropping everything.
You got it. Everyone stay well. I look forward to seeing you in a couple of days. Thanks, Adam.
Thanks, Andy. All right, everybody else, thanks so much for watching.
Bye-bye.